Good morning everyone. This is Manjula Devi P, Assistant Professor working in GFGC Kanakpura. Today in this session, we'll discuss about accounting for leases, which is explained in Ind AS 17. So basically, in this concept, in this session, I want you to understand the concept of leases as explained in Ind AS 17. First and foremost, what are the terms which we are using in this video? I'm using the term leases, leaser, leasee, and of course Ind AS 17. So first and foremost, what is the meaning of leases? So in layman's language, we would have heard about the term lease, but in Ind AS 17, it has a specific meaning. So according to Ind AS 17, lease is an agreement whereby the leaser conveys to the leasee in return for a payment of series of payments the right to use an asset for an agreed period of time. According to Ind AS 17, lease is an agreement. Basically, the leaser gives the leasee the right to use the asset in return for the lease payment. That means if an individual has an asset with him, say a machinery, and the other person wants to use it, but he doesn't have the money to buy the machinery, then he can lease the machinery with the owner, okay, and in return to that he has to make some lease payments. The person, basically the owner of the asset, is called as the leaser, the one who is leasing his asset, and the person who is getting the asset on lease is called as the leasee. So in Ind AS 17, so basically it prescribes the accounting treatment when the leaser and leasee record the transaction in the books of accounts. Broadly, we have two types of leases. One is financial lease and the other one is operating lease. So what is the meaning of financial lease? So in case of financial lease, when the leaser transfers the asset in return to the lease payment, the idea is the leasee who gets the asset on lease, it is his responsibility to make any repairs or any maintenance expenses which is eventually happening on the asset. So usually under financial lease, after certain period of time, the ownership of the asset is also transferred to the leasee, but that's not mandatory. But usually the idea of getting into financial lease is to eventually own the asset after making the lease payments. Then what is operating lease? Operating lease is where the asset is again transferred to the leasee in return to the lease payments, but any incidental expenditures related to the asset, like any repairs, any maintenance, such things has to be borne by the leaser. And under operating lease, usually after the fixed period of lease, the asset is returned to the leaser. So there are very less chances, or there are no chances, that the leasee becomes the owner of the asset. He is just leasing it out, taking it on the lease for usage, and he is making the lease payments, and after the fixed period of time, the asset will go back to the leaser as he is the legal owner of the asset. So this is the main difference between the financial lease and the operating lease. So how do the treatment of these lease happens in the books of account? The leaser who is sending the asset to the leasee, he recognizes the asset held under financial lease in his balance sheet and present it as receivable at the amount equal to the net investment in the lease. So if he is leasing out the asset, but the amount that he is supposed to recover from the lease, he shows that amount as the receivable. He shows it as a receivable in the balance sheet as a receivable amount. Usually receivable is a current asset, but if the amount is receivable over a period of time which is more than 1 year, then only the amount which is received in the immediate year will be shown as the current receivable, and the one which is received after 1 year is considered as a non-current asset. Under non-current asset, it is shown as receivable. When it comes to operating lease, so here the leaser should represent the asset subject to the operating lease in their balance sheet according to the nature of the asset. So though the asset is not with him, he sent it to the leasee, but if it is sent on operating lease, he will still show the asset as his own in his balance sheet as per the nature of the asset under non-current assets. So how does the record, the entries are recorded in the books of accounts? Basically we will see the journal entry when the lease is sent in the books of leasee especially. So when the lease contract is exercised, means when leasee is getting the asset on lease from the leaser, so he debits the non-current asset, whichever the asset he is getting it in, and he will credit the lease creditor, means the amount that he is supposed to pay. Then he credits the bank account to the extent that he is making the immediate payment. So he will debit the non-current asset because asset is coming in, and he will credit the lease creditor because the leaser becomes his creditor, he has to make payments in future, and he credits the bank account because money is going to him, so he credits the bank account. Now what is the value at the non-current has to be debited. So here the non-current assets are debited with the lower of the fair value of the asset or the present value of the minimum lease payments. So whichever is lower, whether the fair value of the asset that you are getting or the present value of the lease payments that you are going to make, whichever is lower, to that amount the non-current asset has to be debited with. Then of course, though the asset is on lease, especially on operating lease or financial lease, when the depreciation is charged, the usual entry, you debit the depreciation account and you credit the accumulated depreciation account. Let's see an example. A company purchases land and building on lease contract and the compounded value of both is rupees 20 lakhs and the land accounts for 60% of the value. Rupees 4 lakhs were paid at the time of acquisition of the lease. Pass the journal entries in reporting. So the leasee is getting the asset on lease, he is purchasing it on lease, and the total value of the land and building is 20 lakhs. Out of that, land is 60%. So obviously building is for another 40%. So out of this, he is paying, out of 20 lakhs, he is paying 4 lakhs at present at the time of taking the lease. So what is the journal entry that we are supposed to pass? So we debit the PPE, that is property, plant and equipment, where it is land 12 lakhs because 60% of 20,000 goes to 12 lakhs. And again property, plant and building, property, plant and equipment, where 40% of the amount, that is 20 lakhs, which comes to 88 lakhs, goes to building. So both of it put together makes it 20 lakhs. Out of 20 lakhs, at present 4 lakh is being paid. So we credit that 4 lakh to bank account, and whatever is unpaid yet will go to the lease creditor account. So as and when it is paid, so from the lease creditor it keeps reducing. Just to have a recap of what we did, we discussed about what is lease as per Ind AS 17. Lease is an agreement where leaser transfers his right on the asset to the leasee on the agreed amount for an agreed period of time. Then we have financial lease and operating lease. In case of financial lease, the asset ownership also eventually gets transferred, and any repairs and maintenance even during the period of lease has to be borne by the leasee. Whereas operating lease, it is not. Usually, technically it is defined, any other lease which is not a financial lease is an operating lease. But if we look into the characteristic, in the operating lease, the asset gets of course transferred to the leasee, but any incidental maintenance and repairs has to be borne by the leaser even during the lease period, and at the end of the lease period the asset will go back to the leaser. Okay. So, in this session we discussed about the journal entries that are passed when the asset is being taken on the lease. So, you can there are some questions. So, these are the references which you can use for further examples and clarifications. Thank you very much. Hope you understood the concept.